If you have a foreclosure on your credit report, you can still qualify for car and personal loans. Here's how. 1. Immediate impact. Yes, a foreclosure hits your credit score hard, making lenders cautious. But as time passes and you rebuild your credit, its impact lessens. 2. Distance from foreclosure. The more time that elapses since the foreclosure, the better your chances are of securing a loan. Many lenders become more receptive a few years post-foreclosure, especially if you've shown financial responsibility since. 3. Expect higher rates. Initially, you might face steeper interest rates due to the foreclosure's risk. However, with time and improved credit, you can potentially negotiate better terms or refinance. 4. Down payment amp terms. A sizable down payment can boost your chances for a car loan. For personal loans, consider shorter terms or even secured loans to increase approval odds. 5. Rebuild and maintain relationships. Prioritize rebuilding your credit with timely payments and low credit utilization. If you've been loyal to a bank or credit union, they might offer more flexibility based on your history. Navigating loans after a foreclosure can be tricky, but it's not impossible. To find people who have been in your shoes, join the Dispute Panda community, a dedicated space for credit repair and improvement discussions. And don't forget to sign up for your free Dispute Panda account and attack those foreclosures today.